So let's start. So good evening. You're welcome again to Equity Professional Limited. This is our first financial reporting class. My name is Wasil. I'll be one of the lecturers that will be taking your financial reporting. This is going to be a 17 weeks journey. And the first item we're going to look at in this class today is for you to have a singular objective for this class. And my very first objective in this class, which is the most important for me, is to ensure that every one of you seated in this class do not fail. That's the one and the most important objective for me. And today we are going to start the journey of ensuring that, of achieving that objective. It's an objective because 17 weeks is not so much of a long period of time. Before you know it, it is here. Now, fundamentally, for financial reporting, the first item you're going to learn in this class is that before you would enter the class, before you enter the exam hall for financial reporting, you must have a picture, a complete picture of the core of financial reporting. And the core of financial reporting is that you must understand how to prepare and present a published financial statement. How to prepare and present a published financial statement. And a published financial statement, both for a single entity and a group of entities. That is all I want to teach you in this class, myself and the other lecturer that will be joining me. The core of what we want to teach you on financial reporting is before you enter that hall, you have to be comfortable in preparation and presentation of financial statement, a published financial statement. And when I say published financial statement, I'm actually talking about financial statements that are usually issued out to the public. Financial statement for an entity that might be listed. Financial statement for a corporate entity, a company. We are not dealing with financial statement for a sole proprietorship business or a partnership business here. What I want to teach you is preparation of financial statement for a company, usually that is listed and might not be listed as well, but the core of it is for listed entity. So a published financial statement. So we're going to focus more on that of a single entity, while attention will also be paid to group of entities. Majorly, almost 75% of what you want to learn is that. Now, the remaining 25%, it deals with, after you have learned how to present and prepare financial statement for publication, then you must know how to analyze and interpret those financial statements. So we're going to deal with analysis and interpretation of financial statements. And that is when we're going to be teaching you ratio analysis as well as EPS for that. That's like 20% of your syllabus. And the final thing is ethics. We believe by now that for you to be an accountant, there are certain behavior you must start to portray in public. There are certain attitude, there are certain fundamental principles that you must adhere to as a professional accountant. We would introduce you to that. So we call that ethics. And there is a new technology in place that also has an impact in reporting, which is blockchain technology. We're also going to introduce you to that. So I've mentioned like around 4 items now that would comprise everything I want to teach you in this class. So the first one is preparation and presentation of a published financial statement for a single and a group of entities. The second one is analysis of that financial statement. That's already 95% of your syllabus. Then the remaining 5% deals with ethics and blockchain technology. Now, you see, what we want to teach you will be spread across those 17 weeks. Will be spread across those 17. So what I want to teach you will be spread across those 17 weeks. And so today, I will be looking at regulatory framework. Then we'll look at conceptual framework. Then we'll move to IS1 on presentation of financial statements. This probably I will start teaching you that next week. Then we move to IS16 on PPE. Then we move to IS38 on intangible assets. Then we'll move to IFRS 16 on leases. Then IS36 on impairment of assets. Then financial instruments. For financial instruments, I would use IFRS 9 and IS32 for that. Then IFRS 15 on revenue from contract with customers. Then IS2 on inventory. Then IFRS 5 on non-current asset held for sale and discontinued operations. Then IS40 on investment property. Then IS20 on accounting for government grants and disclosure of government assistance. Then IS23 on borrowing cost. Now, you will see that, you see, this standard I've just mentioned will take us well above 2 months. In fact, that's what we're going to spend most of our time teaching you how to do. And that is because when I mentioned earlier that the core of financial reporting is you learning and knowing how to prepare and present financial statements. There is no way you can prepare and present financial statements without accounting standards. What we use in preparing and presenting financial statements is accounting standards. And that is why the bulk of what we're going to be doing in this class is accounting standards. Don't worry, as we move along, you would get to know all of these items. Now, there are other standards I have not listed here. These are the ones I'll be teaching you. My other colleagues will be taking you IS12 on income tax, will be taking you on IS37 on provisions, will be taking you on IS10 on events after the reporting date, and also it will be taking you consolidated financial statements. So looking at, continuing from what I've mentioned here, so I will also take you analysis and interpretation of financial statements. My other colleague will take you consolidated financial statements. It will take you cash flow. It won't take you good cash flow. We won't take that at this level. We'll take you income tax, EPS, while I'll also take you ethical issues in financial reporting and blockchain technology. So the fact is that we have to do all of this within 17 weeks that we have. And God helping us, we would finish that. And the assurance we're giving you is that we're going to finish it. And we'll find a way to ensure that you will read it. Because if you can read everything we are teaching you, along with your past questions, all things being equal, you should pass the exam. You should pass the exam. So let me leave the introduction alone. So again, the tutors, myself, Wasim, and Mr. Ibrahim Saka, would both be teaching you the financial reporting syllabus for this diet. So you are welcome again. Without further ado, I think we should start immediately. So our first topic today is regulatory framework. Why regulatory framework? Now, when we mention regulatory framework, what this is majorly talking about is the regulations that governs financial reporting. So financial reporting majorly is around regulation. it's strictly regulated. So under this topic, I'll be looking at the rules and the principles that governs financial reporting, the rules and the principles, right? And also, I'll also be looking at the regulatory bodies that develop these rules and principles. So what we want to discuss today, which is regulatory framework, two things are underneath it. The first is the rules and the principle that governs reporting, because that's the regulation itself. Then when we understand the regulation, then we're going to look at the regulatory bodies that develop those rules and principles. Somebody must develop those rules and principles. So we're going to also look at the regulator itself. So, and that's regulatory framework. Now, let's start with the rules and principles. Summarily, the rules and principles, which is the regulation that governs reporting, summarily, it is known as GAAP. We know it as GAAP, generally accepted accounting principles, practices. So it is popularly called principles, majorly. I'm talking about the P now. So GAAP, generally accepted accounting principles. Now, this GAAP is the rules and principles that govern reporting, and every country of the world, every country has their own GAAP. Every country. In Nigeria, we have our own. In US, they have their own. In Ghana, they have their own. Every country has their own GAAP. So what we want to learn in financial reporting, you wanting to be an accountant, what we want to learn is GAAP. GAAP, that's what you want to learn, which is the rules and principles that governs reporting. Now, what is GAAP? GAAP are three things. Number one is the national company law. Number two is the national accounting standards. Number three, local stock exchange requirements. These three are GAAP. So in the exams, they could ask you, what are the sources of GAAP? They are all asking you that, what is GAAP itself? Sources of GAAP is, what's GAAP? So three things: national company law, the national accounting standards, and local stock exchange requirements. You will see that for the company law, the accounting standard, all of it, you would have national in front of it, because it's telling you that it's distinct for every country. Okay, it's not a singular item for all countries. It's distinct. Every country has their own company law. Every country has their own accounting standard. Then every country has their own stock exchange requirements. Okay, that's why we have national, and local. So let's pick them one by one. The first one is the accounting standards. Accounting standards. Now, when we say accounting standards, by definition, accounting standards are from here authoritative statements of how particular types of transactions and events are treated in the financial statements. You will recall when I was doing my introduction and I mentioned some standards up there, you see, and I told you that those are what we use in preparing and presenting financial statements. And the reason I mentioned that is that they are authoritative statements. They are the ones that will prescribe how you treat transactions in the financial statements. It's accounting standard that will teach us. So when we start learning, we're going to learn standards on revenue in a way that whenever a company makes sales, there's an accounting standard that will teach you how you record that in your books. When you buy an asset or a car, let's say a car, there's an accounting standard that will teach you how you record that in your books. So accounting standards are indeed authoritative statements. It's final, right? And when we say accounting standard, then we are talking about IFRS, International Financial Reporting Standard, or they are also called International Accounting Standard. And to fast forward knowledge, this is the accounting standard that we use in Nigeria, because Nigeria is our focus majorly. So IFRS is also called IAS. However, there are some other standards in some other countries. Popularly is the Financial Accounting Standard, FAS, which is used in the US. Okay, but we are not going to be mentioning that. Our focus is going to be on the IFRS or the IAS, since that is the accounting standard we use in Nigeria. So for me, right, you just need to know that when we talk about GAAP, one of GAAP is accounting standard. An accounting standard is what would prescribe, is what will follow on how we treat transaction in the financial statement. It's the accounting standard that will tell us how. Another gap is the company law. Again, every country has its own company law. And why is company law even coming up as part of gap? What does company law have to do with financial reporting? Okay, you see, there are certain issues that are not covered in an accounting standard, that you can only deal with them in company law. And example of company law is the Companies and Allied Matters Act of 2020, the CAMA 2020. You see, in CAMA is the CAMA that provides the rules on how a company will issue and redeem share capital. They are the one that will tell us the types of share capital and other issues that have impact on financial reporting, like giving us definition of SMEs and some other items that you would learn as we move on. For example, now, when we are preparing our accounts, we need to know which one is ordinary share capital. We need to know which one is our preference share capital. We need to know what is our issued capital. We need to know all of this, but you won't find it in accounting standard. There's no standard that tells us the types of share capital. It's the company law. So the company law too is a gap because it has inputs in financial reporting. And majorly in CAMA 2020 is the one that will give us what are the types of share capital we have. They are the one that will tell us what's the process of issuing share capital to your shareholders. And if you want to redeem share capital, it's also in CAMA that will prescribe or provide rules on redeeming share capital. Another company law is BOFIA, the Bank and Other Financial Institution Act of 2020. BOFIA specifically provides rules for banks. And example of such rule is Section 15 subsection 1 of BOFIA that requires banks to make an annual appropriation of 30% of their PAT if their statutory reserve is less than paid up share capital, and 15% of PAT if statutory reserve is greater than their paid off share capital. You really don't have to cram this for your exam. So I'm just trying to give an example of how BOFIA also has an input in financial reporting. When you check financial statement of any bank, you'll find out that they usually make this reserve in their books. It will be there. It will be there. And the prescription on how this reserve is made is not in an accounting standard. It's not in any accounting standard, but it's in BOFIA. So it has an input in financial reporting or in the preparation of financial statement for banks. So company law really is also a gap because of these sections that prescribe how you treat certain items in the financial statement. Another one is the tax law. The tax law, because the determination of taxes in financial statements, you need to obey the tax law. If you need to comply with the tax law to determine most of those figures, like VAT, for example, now, is the tax law that prescribes the rates and also the vatable supplies. Withholding tax also, there was a regulation that came out today, right, that is making itself public, that withholding taxes now will now be lessened on SMEs and those involved in agricultural and production activities. I mean, that would also impact how you report these items as an accountant. So it has an input into the financial statement. Again, company law is a gap. And finally, is local stock exchange listing requirement. The local stock exchange listing requirement. See, um, every company that is listed on the stock market must comply with a listing requirement or a stock exchange listing requirement. We have one in Nigeria. So if a company wants to list or become a quoted entity, SEC will give you the requirements you are supposed to comply with, the reports you are supposed to provide, what they want to see in your financial statements. And also, in this listing requirement, if you want to continue to remain listed after they have approved you to be on the exchange, there are continuous requirements you must meet in such a way that if you don't meet them, they will delist you. And this has happened last year. They delisted some entities, few entities in insurance industry and all of that. They delisted them because they did not meet certain listing requirements. They had to delist. They will enlist them again, but they would pay. They will pay penalties and what have you. So it also has input into financial reporting. I can tell you for free that in the exam, the way the examiner will ask this, I can like asking this if they want to ask questions in this area. And we have seen them asking it always as what is gap? Or they will ask you, explain the sources of gap. Usually is for between 4 to 6 marks, usually. So you just need to explain the company law. I mean, you don't have to cram this. So there's no like specific definition of company law. It's just to understand that every country has a company law. What will give you the mark in the exam is giving examples of company laws and why company law is a gap by telling the examiner that example of company law is CAMA 2020, and it provides the rules on how we issue and redeem share capital, the types of share capital and other issues like that. Then BOFIA, then the tax law also. Explain the local stock exchange requirements, explain it the way I've explained it to you, that every entity must obey SEC requirements if they want to get listed. And for them to continue to be listed, there are requirements they must follow, there are inputs they want to see in their financial statements before they can remain listed. An accounting standard, which is the ultimate, which is the authoritative statement that prescribes how you treat transactions and events. And in Nigeria, the accounting standard we use is IFRS, which is also called IAS. Okay, so that's GAAP, which is the rules and the principles. Now, let me tell you this. In this class, our focus is going to be on accounting standard. I will not be teaching you about company law, right? I will not be teaching you about local stock exchange listing requirements. I will not be teaching you about the content of that so much in financial reporting. My core in this class, which is your syllabus, is that we focus on accounting standard. That does not undermine the fact that company law and local stock exchange listing requirements are also gap. But our syllabus says that going forward, we focus on accounting standard. So please remember, when we talk about gap, we are talking about the rules and principles that governs reporting, and there are 3 of them, 3. But we are going to narrow down, we are going to focus on accounting standard. Other courses will teach you these other areas. Okay, now, principles and rules are not the same. You see, I've mentioned that regulation in reporting are the rules and principles that governs reporting. You need to understand that they are not the same. If you check the English dictionary, you will see that, or if you Google it, just definition, what are principles? One of the definition there, it's that principles are fundamental truths or proposition that serves as a foundation for a system of belief or behavior. So is a fundamental truth or a proposition. It's just a proposal, right? And it's a fundamental truth. It's like a background. And what it does is that it gives you a foundation for a system of belief or behavior, or for a chain of reasoning, which goes to show that this definition is saying that whatever you call principle is something that will give you a guide. Now, it is left for you to achieve the result. It is left for you to reason. It doesn't give you everything in detail, like step by step, like the way Google Map does. Google Map will tell you, okay, after 1 kilometer, turn right, after 2 kilometer, turn left. That's rule. Principle will give you a general guide on how you achieve your objective, not detail specific. No. So principles are different from rules. Principle allows you to think. Principle gives you a general foundation for reasoning. And as we move along in our studies, you would understand that IFRS or IAS that we use in Nigeria is a principle-based framework. Meaning that most of the things I'll be teaching you in those IFRS is principle. They will only give you a general guide. You will see. They won't tell you specifically that, okay, this is how you treat this item. No, it will only give you a guide. So depending on the situation you find yourself, you will now tailor it to that, right? You will see. So just have that remembrance that IFRS that we are learning in this class is principle-based. However, there are some accounting standards in some other countries, popularly the financial accounting standard that they use in the US. That is rule-based. And if you look at the English dictionary again, when we say rule are set of explicit or understood regulation, a governing conduct or procedures within a particular area of activity. So rule is explicit. And when we say rule, it assumes you understand it. So that's why mostly they will say ignorance is not an excuse for breaking the law. You can't say you don't know. So when they say something is rule, assume that you understand it because it's explicit. It's just for you to go and sit down and read it. Or when you want to do something, just follow it. So rule would tailor everything down and will tell you explicitly how you should achieve a result. So principle and rule are not the same. Now, you need to understand that this gap that we mentioned, which is accounting standard, company law, and local stock exchange listing requirements, from the way I've explained company law is rule-based. Karma is rule. Do this, do that, do this, do that, do this. Maintain this certain percentage of reserve is rule. The same thing also is the local stock exchange listing requirement. Is also rule-based framework, right? So the only one that is principle-based is IFRS, as far as Nigeria is concerned, since that is what we use. Okay, so that goes to show that when we talk about GAAP, which is the rules and principles, right? These rules and principles are not the same. There are certain countries that their GAAP is principle-based. While some other countries, their gap is rule-based, like the United States. So I can categorically say that in Nigeria, we use a combination of principle and rule-based. They work hand in hand. Nigeria, UK, Canada, Australia are examples of countries that make sure principle and rule-based framework complements one another. So in the sense that the IFRS is principle-based, while the company law and other regulations are rule-based. Okay, so that's principle and rule. Again, I kind of asked this before for 5 marks. Explain principles and rules. What they want you to do is just to tell us what is a principle-based framework and an example of it. So I wouldn't expect you to cram this. I would just expect you to understand it, that anything principle is something that will only give you a general guide, and it is now left for you to now apply your reasoning. An example is IFRS, and that is it. Rule are strict, explicit regulation or procedure for achieving an objective. And an example is company law and a local stock exchange listing requirement, and that's it. You earn your 4 marks explaining and giving examples. Now, some diet ago, I can ask you guys advantages and disadvantages of a principle-based framework, and also advantages and disadvantages of a rule-based framework. We have agreed in this class that in Nigeria, we use a combination of principle and rule, but I mean, you need to understand what are the advantages and disadvantages. For principle-based framework, some of the advantage for principle is the fact that it's flexible. As you would agree with me that because it allows for judgment, because it allows for reasoning, so it's flexible, it can easily adapt to the uniqueness of every business or uniqueness of a circumstance. It's adaptable because it allows you to use your own judgments. Depending on the type of transaction you are faced with, treat it in that situation. So it's highly flexible. It is an advantage. Another one is it allows for professional judgment by accountants. So accountants are given the latitude to make judgments. They are given an opportunity to be professional. That, okay, be professional, right? So it allows for professional judgment. And like we have mentioned also, it's extremely adaptable to various scenarios, various economic conditions, various dynamic business environments. Like in Nigeria, our business environment is dynamic. Different regulations are coming every day. CBN is throwing in different circulars every day. Exchange rate is fluctuating like we have not seen before. Well, lately it has been stable. But I mean, the business environment is very, very dynamic. So a framework, an accounting framework that allows flexibility is really good for our situation because it can easily adapt. Another one is economic substance. For now, economic substance is that depicts the core transactions of an entity. So because principle-based is saying that use your judgment, you'll find that you would have to present the major financial reality of each business, which is economic substance. What is happening in the business? What is the transaction itself? So economic substance here is saying that the transaction is what we are going to recognize in the books. And because of the dynamism of transactions, and because of the adaptability of IFRS, it will help you, it will make sure you present economic substance, right? You would learn more about economic substance in the next topic. But for today, just see economic substance as the core transaction of the business. And with IFRS, it can ensure that you are recognizing or recording the core transaction of the business in your books. Okay, let me leave that as that. Another one is global acceptance. What I've not mentioned is that IFRS is used in over 144 countries of the world. IFRS is used in over 144 countries of the world. So if you want to get international business and investments and your company adopt IFRS, so it's easy. When you want to present your reports to your foreign investor, they would easily understand it since most likely they would also be using IFRS. So you are reporting under the same framework. So global acceptance, and of course, it will definitely facilitate global business because we are preparing our reports using a common framework. And some of the disadvantages is the challenges in consistency. You would agree that when you allow people to do how they want, I mentioned earlier that IFRS gives us professional to be professional. Some people will never be professional. Some people will misbehave. Let's even leave that for now. You see, the challenge is this. Different people would interpret a guideline in different ways. So you'll find out that because of varied interpretations, there might not be consistency and comparability between reports. Is a disadvantage, and it exists, right? So challenges in consistency. Another one is the concerns about transparency. So because again, we are giving professionals the freedom to present their financial information in a way that aligns with their interests, in a way that aligns with their economic circumstance or business environment. People will window dress. People would obscure negative aspect of their financial health. They would only show you what they want you to see. So there are concerns about transparency. People would cook their books. People would account creatively. It exists also. So concerns are there about transparency. Is a disadvantage of principle-based. Another one is the risk of manipulation. I mean, this one is similar to the earlier one. So professional judgments might not be eventually professional. Who might manipulate their financial statements. Also is the varied interpretation. People interpreting a principle in different ways. And also is complexity in application. So when you have interpretations that can be explained in multiple ways, I mean, then it becomes difficult to apply. When one A is saying, no, this is how we should apply this general guide. B is saying, no, this is how I think we should apply it. It becomes complex. So, and all of these can result in legal or regulatory challenges. Legal or regulatory challenges can arise from all of this because there could be disputes over treatment of an item. There could be, if it's discovered that there was creative accounting, they could sue companies. So serious legal and regulatory challenge. And also you will find out that there is a body called Financial Reporting Council. I would mention that later, but I mean, this exists, legal and regulatory challenges along the line of principle-based, because by the time there are disagreements on how you should treat an item. By the time you're misleading your investors, they could sue you. Okay, so those are advantages and disadvantages. So I kind of asked this before for I think 7 marks. So it's an area you don't want to joke with in case they would ask it. For rule-based, you see, the very first advantage for rule-based is the clarity and specificity. It's clarity is laid down there. It's just there for you. So, like in the US now, their framework is rule-based. It has told us step by step how you should treat items. So you are not using your professional judgment. It's rules all through, right? So it's clear and it's specific. And because of that, it becomes comparable. So you can easily compare items. You can easily compare financial statements. It makes it easy for everybody because everybody is rule. You have to do it in a particular way. So, and of course, it's going to reduce ambiguity. It will be consistent. There is no nobody would say that no, I thought it was this. No, it's clear, it's specific. So it's going to reduce unnecessary ambiguity in reporting, and it's also going to foster legal compliance, right? Because it's rule. And you see, the thing about rule is that if you don't follow it, there will be penalty. So a lot of people, a lot of entities would easily want to comply. And because of that, it's going to increase investors' confidence and there are legal certainty. You know that there won't be any legal dispute or what have you. And the disadvantages are, one is rigid, is not adaptable, right? Is not adaptable. You might find out that you might not be reporting your economic substance. You might not be reporting your core transactions just because you want to comply with a rule, right? Another one is it's you now have a checklist mentality, rather than focusing on the underlying transactions, on the underlying economic reality. You are more focused on that, okay, you want to follow step 1, step 2, step 3. And following steps can be complex. When you have set of rules, it's tedious, right? Especially for entities that have a lot of like dynamic or diverse transactions or operations. It could be complex. It's a lot of work. And again, the emphasis might now be on compliance rather than on transparency or on core, true and fair view, like that. So it will be, you just want to comply. I just want to comply. And again, because it is rule, as circumstances is changing in business, as events are unfolding, as new things are coming up, there will be frequent updates. They will be coming up. And also, it's possible that there could be varied interpretations as well. There could be varied interpretations. So those are advantages and disadvantages of rule-based framework. Okay, so I'm done with one aspect of this class, which is the rules and the principles. Don't forget, when I started regulatory framework, I mentioned that it's 2 aspects. One aspect is the rules and principles, while the other aspect is the regulatory bodies. Who are the regulators? So I'm done with the rules and principles, talking about GAAP, explaining all of this, now telling you that principles and rules are different, then looking at the advantages and the advantages of each of those principles-based work and that. Okay, now, because I can't really see you guys, I can't read your body language, I don't know who understands and who does not. Before I ask you questions, Do you have any question for me? Okay, so before you ask questions, right? Oh, oh, I'm sorry, just let me make this point. So before you ask questions, right, you would find out that financial reporting is like almost 70% theory and like 30% calculation. And most of the calculation we will do will be maybe in group accounts, maybe in preparation of financial statements, maybe in cash flow and few other areas. But mostly is principles. Principle, it's going to be discussions for the most part of it, especially the part I'll be teaching you, and those accounting standards as well. Okay, please, you can ask your questions now.
Okay, good evening, Mr. Osi. I
Hi.
just want to confirm if the notes will be shared after class
Oh,
or this
definitely.
material.
Yes, 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 definitely. It will be shared with you.
Okay.
Hello,
Okay.
sir.
Hi.
Are you aware that the lecture just shut down and it came up again? Is it from your end or what?
Ah, no, I will. Me, I'll just talk,
Okay, okay, maybe my end. Thank you, sir.
Okay. Okay, so I believe there are no questions. So let me ask you questions then. So let's look at this. What's it? Okay, so let me ask you questions then. So anybody can just answer. If you don't want to talk, you can type it, but I want you guys to participate. So the first one here is says financial reporting is governed by regulations. A, 2, B, 4, C, none of the above.
True, sir.
Okay, good. That's correct. Number 2, the rules or principles that governs financial reporting is known as A, GAAP, B, IFRS, C, SAS, D, IAS.
Gap. Gap.
That's
Gap.
correct.
Gap.
Okay, good. So the next, which of the following is not a GAAP? A, National Accounting Standards, B, National Tax Law, C, National Company Laws, D, Local Stock Exchange Listing Requirements.
National tax law. National tax law.
Yeah, that's correct. That's correct. So number 4, IFRS is a rule-based framework. A, true, B, false.
False.
Fantastic. Okay, so that means you are following. So I'll send it to you with the solution. Okay, now, so having understood the rules and the regulations that governs reporting, which is the regulation itself, which we have learned, the accounting standards, the company law, the local stock exchange listing requirements, these are the regulations. Though in financial reporting, our focus is going to be on accounting standard. That does not mean those other ones too does not exist. They do exist. But our core in reporting is the accounting standard. Now, let's go to the regulatory bodies. Who are the regulators? So in Nigeria here, the regulatory body that is in charge of accounting standards in Nigeria is called the Financial Reporting Council of Nigeria. The Financial Reporting Council of Nigeria. You see, this Financial Reporting Council of Nigeria actually was enacted in June 2011. And before then, we used to have NASB that was enacted in 2003. I mean, that's none of our business anymore. But what our business today is the Financial Reporting Council of Nigeria, and it is under the Federal Ministry of Industry, Trade, and Investment. Now, you see, I mean, if I may ask you in this class, who knows the new MD of Financial Reporting Council of Nigeria? Is there anybody that knows? Anyone? Okay. Okay, for me to just relate this, I just want to put one or two together. Sorry, do anybody here knows the person that won the last BB Niger? Anybody?
Ilebaye.
I know you will know that one. And somebody is even typing it. You know the person that won BB Niger, but you don't know the one that concerns us as accountants. These are things you have to be following. Financial Reporting Council of Nigeria is everywhere. If you checked LinkedIn, if you check LinkedIn, Facebook, they are everywhere now. And the guy is always posting every time. These are things you should know. Okay, so the guy used to be the former Commissioner of Finance of Lagos State, Dr. Rabi Olo. He is now the current MD of the Financial Reporting Council of Nigeria. So he came in last year, and he has been impactful. It has been impactful. In 2011, when they started, it was Jim Obaze that actually was the founding MD of Financial Reporting Council of Nigeria. And if that name rings a bell, Jim Obaze, he was the investigator appointed by Tinubu to investigate CBN that came up with a lot of allegation on Emefiele. So if you see what's happening to Emefiele is Jim Obaze, he was the investigator that actually unfolded all of those shenanigans done by Emefiele. He was the originating MD, and the guy is sound, extremely sound. He was removed during Buhari era when he was trying to perform some of his roles that he did it up to redeem. He said that, now Pastor Adeboye has to step down. He was trying to comply with some of the things I will mention very soon. And I mean, the vice president was a member. One way or the other, they had to ask him to step down, but he's an extremely sound guy, right? But I mean, today, as we speak, Financial Reporting Council of Nigeria now is back on track. But after they removed him in 2016, thereabouts, the platform has been very quiet until Rabi Ulu, when it came up. Now we are now hearing back from them. Now back to the main discourse. You see, this body has certain objectives. This body has certain objectives. And the last time I can ask this, they asked you for that you should list 4 objectives of the Financial Reporting Council of Nigeria. So generally, they are in charge of accounting standards in Nigeria generally. However, their core mandate is to protect investors and other stakeholders' interests. That's their core mandate. And of course, that has to be their core mandate, because when we talk about financial reporting generally, the reason why we prepare accounts, especially for listed companies or companies generally, is for investors. Is because some people has actually invested, has put in a lot of money. So there has to be a way that those people would see how you have used their money, what you are owing, as the case may be. So this regulator his core mandate is to protect those people that has put in risk capital into the business. So number one, if they ask you in the exam, that you must always remember is that they are out there to protect investors and other stakeholders' interests. That's their most important objective, to protect investors. So that companies will not just be presenting reports anyhow. No. FRCN will not allow that. And they do it so well. They do it so well. in such a way that most of financial reports that auditors sign and they put out, ordinarily every company is expected to submit a copy of their report to FRCN. They scrutinize it, they look at it, and they are looking at it for compliance with IFRS. If there is any deviation, they will invite the company representative, they will invite their auditors, they will invite their tax consultants. And if they find that the company is actually misleading the users, or maybe they have made a mistake, knowingly or unknowingly, they will be heavily penalized. And they have to record that report from the public. It was all over the news. One of government agencies, one of federal government agency had to recall their report as instructed by FRCN. So they are out there doing the job right now to protect investor and other stakeholders' interests. And in order to do this first point very well, that takes us to their second objective, which is to then teach professionals, to teach companies on issues. So they give guidance on issues relating to financial reporting and corporate governance to professional, institutional, and regulatory bodies in Nigeria. They know that if you want to make people use IFRS, if you want to make people prepare accounts very well, then you have to teach them how to do it. They do that. They provide guidance on issues relating to financial reporting. And of course, corporate governance. For those of you that have not heard of this before, a company that does not have good corporate governance can never publish an accurate or a reliable financial report, because corporate governance is how a company is controlled and directed. A company where the CFO reports directly to the MD, where the MD can instruct him to do and undo, has no corporate governance. Because if the CFO prepares a revenue and is showing 30 billion, the MD might tell him that, see, I cannot present this to my shareholders. My board of directors will think I have underperformed. We need to find a way to make this 35 billion. If that happens in any entity, then there is no corporate governance. There is corporate governance where the CFO reports directly to the audit committee of the board. All these are well spelled out in the Code of Corporate Governance as published by the Financial Reporting Council of Nigeria. But corporate governance is another story for those of you doing CSME. For today, remember that for FRCN to protect investors and stakeholders' interests, they need to teach companies on issues relating to financial reporting and corporate governance. They need to teach professionals. They need to teach regulatory bodies. They need to teach institutions on these issues. And that is the only way they can achieve their objective. So this becomes their second objective, teaching professionals on issues relating to financial reporting and corporate governance. However you want to put it, however you remember it in the exam, communicate the fact that this point is saying they give guidance, they educate, they direct, they teach professionals on issues relating to financial reporting and corporate governance. Now, when they have guided you, you are expected to then follow it. Then that becomes their third objective, which is to ensure good corporate governance practices in the public and private sector of the Nigerian economy. They have guided you. Now, they now go out for audits. They go out to ensure that entities have good corporate governance practices, not just private entities, but even public entities also. It's part of their mandate. It's part of their objective to ensure that they have good corporate governance in place. Like I mentioned, a company without good corporate governance can never publish a reliable and accurate financial report. It's not possible because there is high tendency for manipulation. Also, That's this for corporate governance, ensuring that people have good corporate governance practices. For reporting is that to ensure accuracy and reliability of financial report and corporate disclosures. You see, in the exam, these 4 points is they follow one another, because one must happen before the other. So I always advise my students that, remember these first 4 points. Their core mandate is to protect investor. You are talking about financial reporting. Financial reporting is for investor. So somebody that is ensuring that people comply with how you prepare financial reports, they are protecting the investor, right? And for them to do that very well, they then teach professionals, they teach companies on how to prepare reports and about corporate governance. Then, after we have taught you, we will now ensure that you follow what we have taught you, both for corporate governance and also for financial reporting. I don't like cramming, I like logical reasoning. So you can reason these out because they are sequential. Now, there are some other objectives, right? So if I want to leave this one because it doesn't follow, the next one after this is this. They would ensure that auditors and professionals, they are of high standard. And you see, the way they do this is that when you guys qualify, when you become ACA, you are expected to have an FRCN number. You can walk into FRCN, then register. In fact, every professional that is engaged in the financial reporting process must register with FRCN. If you are a valuer, for example, now, before you can value assets for companies, you must register with FRCN. You must have an FRCN number. Otherwise, that your valuation report, they can't use it in the financial statement. Or if you're an auditor and you want to sign reports, you're an engagement partner, you want to sign a report, you must have an FRCN number. Or if you're an MD, there are room for directors. If you belong to, I think, Institute of Directors, you can also have an FRCN number. Because if you don't have, you cannot sign. You need an FRCN number. So they would verify and ensure that you are professionally qualified. And that's how to ensure high standards among auditors and other professionals engaged in the reporting process. You see, all of these things leads to their next objective, which is to enhance credibility of financial reports. And also, it's going to improve the quality of accounting and auditing, actuarial, valuation, and corporate governance standard. It's going to improve the quality. And also, they help to harmonize activities of relevant professional and regulatory bodies that are relating to corporate governance and financial reporting. The ICANN of this world, the CITN of this world, the ANAN, all of these professional regulatory bodies, they harmonize them. So FRCN ensure that they are peaceful. They ensure that they are actually a professional body and doing the right thing that they should do. Okay, so I think I've given you like 8 points here. The maximum ICANN can ask you in the exam is 4. Knowing 6 is not bad. You can even know everything if you want to. So those are the objectives of the FRCN. And they have departments, which they call directorates. So they have Directorate of Accounting Standard, both for private and public sector, Directorate of Auditing Standard, Directorate of Actuarial Standard, Directorate of Evaluation Standards, Directorate of Inspection and Monitoring, Directorate of Corporate Governance. All of these is just to ensure that they fulfill their responsibilities. So that is the FRCN. So Priska, I guess you want to ask a
Hello,
question.
Mr. Masu.
Hi, Priska.
Yes, I want to ask something before you go.
Okay, please do.
Should I ask you?
Yes, please.
Okay, what I'm saying, this council, are they only limited to quoted company? They don't have anything to do with private limited liability.
They do. They do also. It's both whether you are listed or you are not listed, all companies, right? All companies that prepare reports. Yeah.
Okay.
Yes. So you see, as a matter of fact, when you qualify, every professional must have an FRCN number. And also, you are expected to submit your report to FRCN as a company. Every company, you have to submit your report to FRCN. And also, they usually come for audits. They can invite you to their office. And I mean, if you don't do all of these things, there are ethical issues. You could be penalized for that, and they could withdraw your FRCN number. And when they do that, you can't sign reports. You're not supposed to have input into the financial report. Okay, so Priska, you want to ask another question? Oh, okay, so no. All right, so that is the Financial Reporting Council of Nigeria. Now, the truth is that the Financial Reporting Council of Nigeria does not develop IFRS. They don't develop IFRS, but rather they have adopted it. They adopted IFRS. They did not develop it. Though it looks as if they're the one that developed, but no, they did not. They adopted it. There's actually an international body behind IFRS that we use in Nigeria. And that is, we feel that you should know it, and I can do ask it. And that's what I'm showing you on the board right now. I call this diagram that will be explaining the IFRS Foundation three-tier structure. And why I called it three-tier structure is because of there are three categories of levels in that body in charge of IFRS, right? The topmost guys is the monitoring board. They are the top guys there, followed by the IFRS Foundation trustees. Then we have the standard setting bodies, the ISB and the ISSB. So is in three tiers like that. Now, so let me pick them step by step. But if you look at this introduction, you would see that this structure is based on two independent standard setting board of experts, the IASB and ISSB. You see, this standard setting body, they are overseen or governed by IFRS Foundation, and this IFRS Foundation is governed by the monitoring board. So three is a three-tier structure. Now, the monitoring board, I don't think ICANN would ask you this. I mean, I just think ICANN would not ask you monitoring board, really. And again, just understand who they are. So you see, this monitoring board, what they do is majorly, they are just there to ensure that this structure in charge of IFRS is actually publicly accountable. And the way it is done, the way they have achieved that is they ensure that the members of this board, I'm jumping here, the members of this board comprises of capital market authorities. And you see, when I say capital market authorities, I'm talking about at Nigerian level, for example, now, I'm talking about SEC. And you know that SEC is the body in charge of all listed companies in Nigeria, the major companies in Nigeria. So it's part of The monitoring board, they would understand what is happening to companies. They will understand the reporting need of companies. They will understand what shareholders want. So the monitoring board is just to ensure that this structure is actually open, is actually practical. They are doing what the market wants. That's why the members of it is the regulator of the market itself, which is capital market authorities. So majorly, the core of this board is majorly public accountability to ensure that this structure, this three-tier structure is publicly accountable. That's why their members are capital market authorities majorly. And when I say capital market authority, in Nigeria is SEC. I cannot ask you to start listing capital market authorities, but some examples are the Board of International Organizations of Securities Commission, right? So most security commission of most countries belong to this board. The IOSCO Growth and Emerging Market Committee, Financial Service Agency of Japan, European Commission, the SEC of US, of Korea, of China, of UK, all of them are there. So the first people is the monitoring board. It's just to ensure that this structure is publicly accountable. It's just to ensure that this structure understands what the market needs. That is why the member of this monitoring board are the capital market authorities, those in charge of the stock markets. And I say capital market authorities are the regulators in charge of capital markets in all countries. And you see, this monitoring board, which is the first guy, which is the top guy here, they are the ones that monitor the IFRS foundation, which takes us to the next structure, the next tier of the structure, right? And this IFRS foundation, their members, we call them trustees. And you see, the core responsibility of the monitoring board is to ensure that these trustees do their job. They ensure that they do their job. And also, for them to do their job, they will ensure that they are the one that appoint and they reappoint, they can even fire some of these trustees, right? So I can ask you this, because the IFRS Foundation are the people in charge of IFRS really in this structure. Now, the last time I asked it was this objective here, the objective of this foundation. And number one is to develop in public interest a single set of high quality global accounting standard, right? As you can see, they are the one that actually develop standards. Not only that, is to promote the use and rigorous application of those standards. And they did that very well. That is why almost 144 countries use it. So they have really promoted the use and rigorous application of this standard. And also is to take care of the needs of SMEs, small and medium-sized entities and emerging economics. This was what actually helped them to reach that 144 country milestone. They concentrated on SMEs and also they concentrated on emerging economies. They concentrated so much on that and it helped them. That's why most countries in Africa, they adopt IFRS. So any of you, if you qualify and you'd move to, you can work anywhere in Africa, fundamentally, in most countries in Africa, because they adopt IFRS. So you can work in care. So that's why you can be in Nigeria, you could be the group CFO for maybe West Africa or for even Africa, because they adopt IFRS, right? Another one is also is to bring about the convergence of national accounting standards and international accounting standard. And this objective is that they know that some countries will not adopt IFRS. They know. So they have it at the back of their mind that, okay, any country that do not want to use IFRS, no problem. So they encourage convergence that, okay, even if you don't want to use IFRS, can we make our treatment similar? And that is what this body, IFRS Foundation, that is what they are doing with the US, with the FASB, the Financial Accounting Standard Board in the US. US does not want to adopt IFRS. US, I mean, they believe they are the world power. Not they believe they are the world power right now. And anything that is not originating from them, they don't want to, they don't want to take it. So they say they are not adopting. So what IFRS Foundation is, IFRS Foundation, for your information, actually originated from the UK. So they actually spread it from there. So what they are doing with the US is they are converging, and a lot of standards that are coming up right now is as a result of that convergence with the US standards, like the IFRS 15 that came out is as a result of convergence on IFRS 15 on revenue, like the IFRS 16 on leases is a result of convergence. The IFRS 18 that will be replacing IS1, though it's not in our syllabus yet, because it's going to start from 2027. So most of you will have qualified and you won't have to really bother about that. So I mean, you would have the mindset to be able to read it on your own when that time comes. But I mean, the point here is this: they encourage convergence of national accounting standards and the international accounting standard. So you need to know this for your exams in case they ask it. If they don't ask it, I mean you have to look for other questions to deal with. Okay, so that's the IFRS Foundation. And these trustees, they are appointed by the monitoring board, and these trustees, they are renewable after 3 years. They might ask them to leave, or they could renew their tenure. And we believe that before you can be a trustee in the IFRS Foundation, you must have good understanding of IFRS. Not just IFRS, you must have good understanding of international issues, because you are going to be developing standards that will be adopted all over the world. So you must be internationally exposed. So that's why most members will be people that have worked in several continents, because these are standards that are used in Europe. These are standards that are used in South America. These are standards that are used in Africa, in Australia, in Antarctica, in Asia. So, I mean, you need to have international exposure to be a member of these trustees. Any of you can be member when you qualify. It's open. It's actually transparent. They put out vacancies for people to apply. So anybody can just apply to become a member if you have worked in several continents. Why not? So that's the IFRS Foundation. Remember these 4 objectives. Okay, so I've mentioned the monitoring board, who are capital market authorities, and to ensure that this structure has public accountability and a formal link between the market and this structure. And the monitoring board appoints and fire the trustees of the IFRS Foundation, while the trustees or the IFRS Foundation itself are the guys that has the core mandate to develop standards and to ensure people use it, which they have done very well. Now, under the IFRS Foundation, then takes us to the main standard setting body, people that actually set standards. You see, this IFRS Foundation is just like the management team. this monitoring board is just like the board of directors, so to say. These people are the management team. So they now have head of departments, who of course will be part of the management people. So you see, the IFRS Foundation have now said that, okay, for developing IFRS, I've delegated it to ISB. It is the core mandate of IFRS Foundation to develop IFRS, yes. But I mean, as a leader, you should be able to delegate. So now, under IFRS Foundation, there is a standard setting body called ISB. And this ISB, their core mandate is they are the ones that are responsible for developing and approving IFRS. Not only that, and also there's something we call interpretations of IFRS. There's interpretations of IFRS. So it's ISB that does that. So I've seen in an ICANN exam before where they ask you that you should list the objective of the ISB. The solution is this, is the same thing as the objective of the IFRS Foundation. It's the same thing. So the IFRS Foundation has appointed the ISB to develop IFRS. And there's something we call interpretations on IFRS and also IFRS for SMEs. So ISB does all of that. And ISB is International Accounting Standard Board. And of course, the members of this board must be experts that must have international practical experience about setting accounting standards, about preparing, auditing, or using financial reports, and also in accounting education, right? So, I mean, you must have worked in several continents as well, right? So, I mean, to make it easy, they have members from different geographical locations. At least one person is representing Africa. I think 3 people are representing Europe. Asia, I think 2 people. Australia, I think 2 people, like that. So all of them, they are people from different continents in this IASB. But for your exams, know that it's the IASB that are the one responsible for developing IFRS and also IFRS for SMEs and also IFRS interpretations. Now, you see, this ISB too, they now have workers, people under them. And the people under them is the IFRS Interpretation Committee. IFRS Interpretation Committees. If you look at this structure I have here, everything is there. From the monitoring board to the trustees. Now I'm focusing on the ISB. You see that under this ISB, there is the IFRS Interpretation Committee under the ISB. Okay, so it's under them. So you see this ISB, this IFRS Interpretation Committee now, their own focus is on interpreting IFRS. I mean, what's the big deal about interpreting IFRS? So interpreting IFRS doesn't mean that they will not start picking every IFRS and be interpreting, right? So where those interpretations usually come in handy is where there are different interpretation of an accounting standard. Yes, they interpret IFRS, but it's usually occur where there is an IFRS and it's being interpreted in different ways. So they will come in and say, okay, this is how we should do it. Or maybe there are issues that are not covered by an IAS or by an IFRS. So they will come up and say, okay, this is how we should do it. Like blockchain, for example, now, we don't have all this cryptocurrency right now. We don't have any standard that governs it, but the IFRS Interpretation Committee came up and say, okay, this is how we should treat cryptocurrencies for now. When I say cryptocurrency, I mean Bitcoin, Dogecoin, Ethereum, and all of these coins, right? So, yeah. So, I mean, that's the interpretation committee. They come up with interpretations, and all of these interpretations, before they are published, it must be approved by the IASB. Of course, the IASB is their organ ordinarily, so it's approved by the IASB. Now, another one is this one is new, International Sustainability Standard Board. It came in 2021, and they issued some standards last year, in 2023. Nigeria started adopting those standards in 2023. So ISSB is also a standard setting body, but their own is around issuing standards on sustainability. So sustainability standard is beyond the scope of our syllabus in financial reporting. We'll talk about sustainability reporting when we get to corporate reporting, which is the next level of your exams. But I just need you to know that this body actually exists, right? And they issue standards on sustainability disclosures, right? So issues around how you ensure you don't misuse the resources, the mineral resources of the environment. You don't engage in deforestation. You don't engage in unfavorable labor practices, stuff like that. So ISSB does that, and they are also a standard setting body under the IFRS Foundation, right? Now, and there is this guy, IFRS Advisory Council. From the name, advice. Yes, they do provide advice to all of those three tier structure. They provide advice to the monitoring board. They provide advice to the IFRS Foundation, and they also provide advice to the standard setting bodies, that is the IASB and the ISSB, the IFRS Advisory Council. And fundamentally, the IFRS Advisory Council also helps this standard setting body, whether IASB or ISSB, in gathering opinions or advice from different countries. They help them gather opinions or advice from different countries. So whenever those ones need opinions, they go through the advisory council. So they are the one that would probably send a questionnaire or any way with which they want to gather the opinions from public. It's IFRS Advisory Council that does that for them. Okay, so you see, these guys have just explained in almost over 15 minutes are the guys behind IFRS, and you have also learned that the IFRS Foundation has the core mandates which they have delegated to the ISB. Besides the ISB, there is a new standard setting body called ISSB that issues standards on sustainability. And there's this guy that advised them. So he provide advice to these structures, both the top guys, mostly the IFRS Foundation and the standard setting body. And the IFRS Advisory Council also helps them get opinions from the public. And don't forget the interpretation committee that provides interpretation where there are conflicting opinions on interpreting an IFRS, or where there are no IFRS or IAS that deals with an item. The interpretation committee will come up with an interpretation on how the item should be treated. As we move on, you will be seeing how all these items interplay. Okay, so I noticed some things here for you that you will be seeing IAS, IFRS, IAS, they are the same thing. The thing is that before IFRS came up in 2005, right, through the IASB. We used to have ISC. So those ones, they were calling those standards IAS. So when they were gaining popularity, they changed the name to IFRS. So IAS and IFRS are the same. But the thing is, as they are updating all of these IAS now, they are calling them IFRS. So over time, we won't have IAS anymore. But right now, we still have it. I mean, now they have updated IAS 1. In 2027, now we will not have IAS 1 anymore. We will now have IFRS 18. We used to have IAS 17. When they updated it, they were not calling it IAS 17 again. We started calling it IFRS 16 on leases. We used to have IAS 18. When they updated it, we started calling it IFRS 15 on revenue. We used to have IAS 39. When they updated it, now we are now calling it IFRS 9. So gradually, they are phasing it out. But right now, we have IAS, we have IFRS. We see them as the same right now. In fact, it is even more comfortable to call IFRS or IAS, to call them IAS, because, I mean, international accounting standards. It's just sweeter that way. Okay, so I am done with the regulators, right? So in Nigeria, the regulator is Financial Reporting Council of Nigeria, but I needed you to understand that it's not the FRCN that develops IFRS. It's actually a structure, and IFRS Foundation is the one responsible, which they have delegated that IFRS development to the IASB. Okay, now let's go to quizzes. If you don't have any questions, let me ask you questions. Okay, so let's do the first quiz. This one says that, which of the following bodies provides the formal link between the trustees and capital market authorities? A, IASB, B, IFRS Advisory Council, C, Monitoring Board, D, IFRS Interpretation Committee, E, IFRS Foundation.
Monitoring board.
Yeah, that's correct. Monitoring Board, yes. They are the one that provide that link between capital market and this structure. The second one is, one of the following is not an objective of the IFRS Foundation. A, to help companies prepare and present financial statements. B, develop in public interest a single high quality accounting standard. C, promote the use and application of accounting standard. D, to take care of the needs of SMEs and emerging economies. Sorry?
To help companies prepare and present financial statements.
Yeah, that's correct. That's the answer. IFRS Foundation don't help companies prepare and present financial statements. So that's correct. So number 3, which of the following bodies is responsible for developing IFRS? I won't read the option. Can you tell me the answer?
IASB. ISB.
No, the answer is IFRS Foundation.
Developing. So I thought
You have to see the guy that has the core mandate. The guy that has the core mandate is the IFRS Foundation. Though they have delegated it to they have delegated it to the IFRS, to the IASB, but when they are reporting to the OGA, is IFRS Foundation the hold responsible for any failure. That's their core mandate. That's their core objective. Though it is now the objective of the IASB too, but the guy responsible is the IFRS Foundation. The guy responsible is they are the one that are supposed to develop a single high quality accounting standards in public interest. Okay, so the answer is the IFRS foundation. Please note that, very important. So if this option does not have IFRS foundation now, then you can then be talking about, okay, IASB. But since IFRS foundation is there, then it prevails. Now, the next one is where there are conflicting opinions on the interpretation of an IFRS, which body resolves these conflicts?
Interpretation committee.
Yeah, nice one. Okay, so that means you guys are seriously following. So that's that. So finally for today, we're going to talk about a setting of international accounting standards. I can like this question. I can like to set it, which is the process for setting accounting standards, for developing accounting standards. And don't forget, so this will be applicable to the ISB, whom development of accounting standard have been delegated to. This is the process they follow in developing accounting standard. And I can tell you categorically that the IFRS Foundation has a system that is inclusive and transparent, due process for developing IFRS standard. So the way they develop this IFRS is not they don't pull in some genius that sits in a corner and write everything. No. It's an inclusive process. So they involve everybody. You see, the due process they follow ensures that the best brains, the best thinking in the world contribute. They ensure everybody is involved. So when they are developing accounting standards, they will be throwing questionnaires back and forth. They want to hear from you. They use wisdom of the public. Everybody is involved. Everybody is seeing the step-by-step of how this standard is developed. You see, for your exam, right, ICANN will just simply ask you is state and explain the standard setting process, right? Majorly, they will ask you that. You need to introduce that by telling the examiner that the process of developing accounting standards is an inclusive and transparent due process whereby the best thinking in the world are captured. They would ensure that their ideas are captured and are strictly complied with. And this process involves, number one is agenda consultation. That's step one, agenda consultation. And the way this one works is that they usually come up with a work plan, which they put together every 5 years. So they will have a work plan. And this work plan is as a result of review and consultation about if there are any problems or any challenges in practice that they need to work on. So every 5 years, they update their work plan that will have a list of accounting problems, right, that they want to work on. So agenda consultation. So they consult, they review a lot of activities, things happening in practice. That's the first thing that's the first step is consultation, right? And it's a continuous affair. This work plan will be updated periodically. So that's step one, agenda consultation. Now, this step two is research program. So from their work plan, they will then come up with research questions on those problems. Research questions, they'll come up with, they would look for how to identify possible solution. And that is usually documented in a discussion paper. They document it in a discussion paper. So This discussion paper, they would usually send it to the public. They will send it to everybody. And everybody, it's in form of questions. You are expected to send in your comments, right? So if you go on ifrs.org, you register, mostly you would receive all of these things when they are working on standards. Send in your comments, right, on those discussion paper. So discussion paper is just, okay, we have this accounting problem and we are intending to work on it. They just want to be sure that it's valid. Should we work on it or should we not work on it? That's the research phase. So if it's something they don't want to work on, they will simply remove it from this step one, from this their work plan. That means it's not really an accounting problem. It does not exist, or there are already solutions for that in other accounting standards. But if it's something they want to work on, then that takes us to the step 3. And you see, this decision they are making is from comments. It's from comments. People are responding to this discussion paper. See, in this step 2, they could be on it for months or even years just to agree whether they should start the project or not. Now, if it's valid that there's an accounting problem, then they would move on to the step 3, which is the standard setting program. So after the research program, they go to the standard setting program. So this is where they actually start developing standards. So from the comments of the discussion paper, then they know that there's an accounting problem, okay, from their research and consultation, which is documented in their discussion paper. Then they will come up with a proposal for a new accounting standard, okay, and this is usually published in an exposure draft. They call it exposure draft. So this exposure draft is just, okay, now that's where they will come up. They already know that, okay, we want to, let's say, for example, I want to come up with an accounting treatment for cryptocurrency. So exposure draft will state the likely accounting treatment, maybe the recognition criteria, just that right now they will now have different ways they want to recognize it. The measurement basis, they'll have different ways they want to measure it. So they will send this exposure draft to the public. It's always very bulky, a lot, because there would be a lot of issues there, and there will be a lot of alternatives there, so that they can narrow down to one. So by the time they send it to you, you are expected to read it and throw in you are supposed to throw in your own comments. That, okay, I think this one is okay because you explain that. So they could be on this exposure draft for years, months, depending on when they're able to get valid results and they are satisfied, but they send it all over the world. So after the exposure draft, then they can then narrow down from comments of people, then they would then issue an accounting standard, or it might be an amendment to an existing standard. And that's the process, right? So step 1, agenda consultation. Majorly the work they do here is develop a work plan. Step 2, which is the research. So which is the work plan, they will research on it. So they document those problems in discussion paper, which they will send to the public. Then if it's actually a problem, an accounting problem exists, then they start the standard setting program, which starts with the proposal for a new accounting standard, which is codified in an exposure draft. Then after back and forth, sending the exposure draft to people, then they develop accounting standards. So in some textbooks, this one I put together in 3 steps. It could be 4 steps for some people, right? So they will separate exposure draft and accounting standards. They will separate those ones. However, it doesn't end there. the process of developing standard continues with maintenance program. So they maintain it. And when I say maintain, is they call it post-implementation review. They carry out post-implementation review. And this post-implementation review is just to see that people can easily apply and interpret this standard. If people are having challenges in interpreting, that is where the IFRS Interpretation Committee will come up. They come up with an interpretation, right? So, and that ends the cycle of developing accounting standards. So, you see, all of these things for financial reporting, these are extremely important for us. Extremely important for us for financial reporting. You need to know all of these things very well. Okay, and that's that for that. The next one here is adoption of IFRS in Nigeria. I'm not going to do this because it has passed. ICANN will never ask this. Never. It has passed. Companies started adopting IFRS from 2012. And every company in Nigeria must have adopted IFRS. From 2014, there was every company as of today must adopt IFRS. So those steps or those phases has passed. So we used to teach this during the earlier days when IFRS just came in 2011. But now I'm just leaving it in my notes, just there for decoration. You can leave it and not even read it if you don't want to. Then finally, yeah, I'm done, is the need for regulation. Why is regulation important? Okay, there are a lot of reasons why it is important. Number one is, if you read all this I have here, the core thing is that it ensures compliance with IFRS. Number two is it ensures enforcement of compliance, right, with IFRS. And another one is that they would ensure that financial statements users are provided with relevant and reliable financial reports. Another one is that with regulation, similar items are treated in a similar way. Similar items and similar transactions are treated in a similar way. And they would ensure that companies don't mislead the users. Okay, so these are some of the reasons why regulation is necessary. Okay, so that ends it with this part of your syllabus. I've just finished 5%. ICANN says it's 5% of your syllabus. Last diet, it's one of the first diet they didn't even ask it at all. It wasn't there. I'm sure this diet, it will be there. I don't know. It didn't come out at all. Last diet, we were busy with accounting standards. We bombarded the entire questions with accounting standards from number one, which was cash flow statements, to number two, which was on standards, number three, which was on group accounts, standards here and there, the ratio, of course, right? Then income tax, all of that. So that's that for regulatory framework. So in the past, I kind of asked some reasonable questions, like in 2020, for 10 marks. They ask you to explain the three main objectives of FRCN, which I've taught you already, and the two ethical issues in financial reporting, which companies may be sanctioned for by this body. If you remember, every professional must register with FRCN. If you register, they can sanction you. Every company are expected to submit their financial report. If you don't submit, they will sanction you. If you don't have FRCN number, you must not sign financial reports. If you sign, they will sanction you. They could come for audits. If you don't allow their field auditors to enter, they will sanction you. So those are ethical issues. 10 marks. Just ask you to identify two of them. In 2020 November also, They asked that you should explain 4 reasons why financial reporting should be regulated in Nigeria. So this is talking about the need for regulation that I've just mentioned here. Also, they say we should identify and explain 2 sources of accounting regulation. That's the National Accounting Standards, National Company Law, and Local Stock Exchange listing requirements. And also they say you should highlight the objective of IASB, which is also the objective of the IFRS Foundation, to develop single high quality accounting standard in public interest, to promote the use and rigorous application of those standards, to take care of the special needs of SMEs and emerging economies, and also to ensure harmonization of national or local and international accounting standards. So in 2020 also, they ask you to explain principle and rule-based, like I've taught you already. And also they say you should highlight 3 basic steps for developing accounting standards. Step 1, agenda consultation. Step 2, research program. Step 3, standard setting program. And I've seen in one other diet where they ask you that you should list 6 steps in developing accounting standards. Then that one, you just try to break it down for them so that you can maximize your mark. You could say, okay, number 1, consultation. Number 2, project plan. Number 3, research program that will result in discussion paper. Number 4, accounting standards program that would result in exposure draft. Number 5, accounting standard itself, published accounting standard. Number 2, maintenance program or post-implementation review. So, but this one is more practical. I mean, based on how it was presented on ifrs.org website, it's actually 4 steps, like you have in your notes, which I'll be sending to you. But here is 3 steps. Then in 2022, they asked that you should identify the 4 main objectives of the Financial Reporting Council of Nigeria. See, all of these things they could ask again. And these are questions at the professional level. I just put it here. So, and that is that for today. Wow. Solid 2 hours. Solid 2 hours. Okay. So I'm going to stop here for today. And my colleague will not be available this week. He will be starting next week. So the next class for this week, I think is on Thursday or Friday. I'm not sure. I think it's on Thursday. I will be taking it. I'll be taking that class. Yeah. So that's it for today. So do you have any question?
Hello, sir.
Yes.
Please, I have a question.
Please ask.
Okay. You mentioned that financial statements are to be submitted to the FRCN.
Correct.
Yes, I just want to get that clear. I don't know if they work hand in hand with the FIRS or something, because I work in an auditing firm, and then submitting financial statement to FRCN, I really don't know about that. So I don't know if I'm getting it mixed up or something. And then you said they've come for audits.
Yes.
I've never seen anywhere where FRCN come for any audit. Or is it that something triggered them to come, or they have to report the company or something? I just don't get that part.
Yes, we are very correct. So just that they are not doing what they are supposed to do. So I've told you what they are supposed to be doing, right? Based on their mandate,
Okay.
based on their act. They used to do it. In 2013 or 14, I'd represented one of my clients. They invited one of my clients for audits. They invited. So they looked at some things. They said they didn't apply. I was their tax consultant then. The auditor was, I think, EY. So they said they didn't apply a particular item very well. So they will sit you down, you discuss. So it happens, right? So that they are not doing it. Right now, they are not just doing it. But hopefully they will start. But right now, I don't even think they will start. With the economy right now is just not smiling. Nobody wants to place unnecessary regulatory burden on companies. But that's what they should do, Temitope. That's what they should do. Right?
All right. Thank you, sir. I get it.
Yes. Any other questions? Okay, no questions, right? Okay, so you're welcome again to Equity. This is our first class. We're not going to, there's no time for joking here. We mean business, right? We want to finish the syllabus and finish it well. We want to ensure you pass. We'll try every cards that we have, every technique we can to ensure you pass. 17 weeks is not a short period of time. Though this is virtual, but I would like you guys to come together and let's look as if you guys are seeing one another. Don't make that group that we created to be dry, make it active, relate with one another, share materials, and communicate as much as you can. So during this 17 weeks period, we're going to be friends. We're going to be interacting a lot. Feel free to reach out to me on WhatsApp or calls. I'm just a WhatsApp chat or calls away to assist you, to help you, and to ensure that you do not fail this exam. Remember, my core objective in this class is that you do not fail, and we'll use every trick we have to ensure that you don't fail this exam. So I will see you guys on Thursday, right? I'm not the one that will be taking you on Thursday going forward. I should not be the one. It should be my colleague that will be taking you guys. He's not around. So if there will be any change, I would immediately let you know on or before Thursday what will happen. So, but for now, I really appreciate your attention. You'll be getting your notes. Of course, those that have paid anyway, so they will get their notes. So I will implore all of you guys to pay up your lecture fees so that you can start getting these notes and so that you can start revising as soon as possible. So thank you very much. Do have a wonderful night. Bye-bye.
Good night, sir.
Good
Thank
night,
you. Good night.
sir. Good night,
Thank you.
sir.
Good night. Good night, everybody.
Night.
And